I just want to do a market update. The last one I did mid-December, I'm actually pretty happy with, and that was to be cautious, be conservative, a low portfolio allocation, stick to key sectors like FANG plus semis, which I have done. In fact, I've sort of net reduced my exposure quite a bit. Got some options on semis, own options on XPEV, and also own stock in Tesla. So yeah, since then we've had a pretty decent market. Not even actually that. We've had a market pullback. Actually, not that huge, really, in the bigger scheme of things. But individual growth stocks, growth tech stocks, have been totally slammed. So saying that, we've had a few sort of positive days, and then all of a sudden negativity on Twitter has gone from the end of growth, go to value, to things are looking pretty good again. So as I understand, there was some Fed minutes that were a little bit more bullish, but I won't make it my job to get involved in that. I just want to go through my process for looking at the market, because what I'm looking to do is for the market to give me a clear signal to buy, and then I want to buy a combination of low volatility options and stocks, and hopefully we get a bit of a bounce in the market and then sort of sell into strength. And the idea is just to rinse and repeat that a few times a year. Then every now and again we're going to get the major sell-off where the number of stocks going below the 200-day. We're trading above the 200-day moving average, goes below about 15%, and that's when I'm going to look for sort of the big home run trades. But we're definitely nowhere near that sort of environment at the moment. The first thing I wanted to start off with is valuations. So this is a list of price to sales someone's put on Twitter. I can just see how they've just come down just so much. Now, obviously, some of these were way too high to start off with, but looking now, some of these actually don't look that expensive at all. TDOC down from a price of sales of 21 down to 6. Roku down to a price of sales of 10. I picked those two in particular because there's a lot of negativity on Cathie Wood from ARK. Now, look, I don't know, but I just sometimes wonder if there's just a bit of inbuilt sort of jealousy or chauvinism on Twitter, because just people seem to love to hate her. So just sort of going through the process of, well, what happens if she's right on a long-term basis? You can potentially see the case. So like I say, like TDOC on a price of sales of 6 is, some of these are actually looking pretty reasonable. Now, of course, it could go down further, but we don't have these. There's not quite the same sort of silly valuations that we sort of had last year. A lot of that's sort of been wiped out already. So that's just one component of many, but that's sort of saying to me, well, we're probably getting towards the bottom of what's going on in the market. But let's move to my analysis sheet on the charts. Okay, so I'll just minimize that. I'll put up a stock research sheet. Okay. I might just quickly start with the S&P, this column here. S&P hasn't fallen more than 10% in well over a year now, and with that, you need that 10% fall to qualify for a follow-through day. We just haven't had that, so it's been incredibly strong. I think it only fell by a maximum of 5.5% in 2021. So it just hasn't had a pullback for a long time. Pullbacks are healthy. You want that. You want a bit of blood on the street. You want a bit of a reset. The S&P just hasn't had that at all. So if I just go through some key statistics on the S&P, the distribution days are actually pretty high. Not particularly stretched from the 200-day moving average. However, there's divergence on the daily and weekly timeframes. seeing some pretty decent distribution on the weekly on the S&P. So yes, it's technically in a sort of stage 2 uptrend, but I think there's potential sort of stage 3 signatures that are coming through there now. A bit of sort of sloppy price action as well. So I'm a little bit sort of cautious on the S&P. Now, it's not saying it's going to be a crash. It could just be a meandering sort of moderate sort of pullback. I don't know. But yeah, I think there's a few things to be worried about there. Okay, now that's the S&P. Let's go to the NASDAQ. Sorry. Righto. Let's go through. I'm just going to... Let's make this a bit easier to read. Okay, NASDAQ. Last follow through day was October last year. It gave a signal in early October for me, which was an intermittent low, which is a green light. That's when the number of stocks trading above the 50-day moving average dropped to below 20%, and went back up again. We're sort of just jumping around a bit. We're actually not quite there at the moment. It came close in the last few days, and I was getting a bit excited. Dropped down to sort of 30 or so, but after today, it sort of pushed back up to 40. So, you know, we might be sort of having a small sort of low in place. But for me, I've just found that just going through this previous years, if I can just be patient and wait for those number of stocks trading above the 50-day, really just get right down there, right down sort of below 20%, then above again, then that's a good signal. And we're actually not there yet. So now maybe it's not going to happen this time. We'll have a bit of a push from here. We'll see. Let's go through less distribution days, which I found kind of interesting. We had a bunch, but now I've sort of updated this chart again, and yeah, so things sort of quieted down a bit, which is good. Actually, pretty much tagged the 200. Well, in fact, it did. Sorry, on an intraday basis, tagged the 200-day moving average, which is great. Push back above there a little bit. Yes, there is unfortunately RSI divergence there. You can see it sort of being sort of pushing up here, but sort of drifting off. Also, to sort of an extent here with the weekly, so new highs, not really new highs on the weekly. Still like technically a stage 2, but again, I think bit of sloppiness in the price action here. So that's indicating, well, it's potentially stage 3 as well. And again, like the S&P, if we just zoom out, these indexes have just had sort of huge runs. So we're definitely not at the bottom of a stage 2. At least I don't think we are. So I think yes, potentially there could be sort of stage 3 or just a stage 2 needing to rebase and have a reset, which, well, back to where it was, what's that, back in September. So, you know, it's sort of 4 months of sort of a base now. So, you know, arguably it already has been sort of doing that. Breadth is still really bad, sort of declining. It's not a great shape. RSI is sort of in between, so it's not sort of hugely overbought, not hugely oversold. Volume blow-off action, look, it hasn't been a huge amount. It's even sort of November, December last year. I'm not going to recall. I think potentially, yes, an Apple. That's what got me to sell those options. Has there been panic selling capitulation days? So this to me is like a yeah, the sign you're getting more-ish towards the bottom. Definitely puts you in that sort of red traffic light. And yeah, we've definitely seen that. We saw a cracker in, I think it was the 20th of December in Tesla. It got sold off really hard, and then that just tagged previous resistance sort of, you know, perfectly from there. So that was a good one. And also yesterday, the 10th, I sort of woke up in the middle of the night, just seeing what was going on, and everything was just slammed, like everything. And then woke up again in the morning before market closed, and everything just had recovered, you know, amazingly. So huge capitulation selling day there, followed by a huge recovery. So that's a good sign. Distribution in the FANG, and when I say FANG, I also include a few others like Microsoft and Tesla in there. Yeah, there definitely has been. Google, Apple, and Microsoft. I haven't really been seeing that being sort of talked about too much on Twitter, but and there's also plenty of divergence across the FANG stocks: Tesla, Google, Apple, Microsoft. Netflix has been going on for a while. Netflix has been a pretty poor performer. Moving on to some other general euphoria. Well, yeah, today there was. That's one day. Up until recently, it's been super negative. People have been going short. It's into growth. It's into tech. That's it. Semis is still holding up really well. VIX isn't particularly sort of high at 18. It's come down a lot. VVIX, that's sort of gone back in a range at 111. So that's a reference to the S&P 500. So usually you get a bit of a buying opportunity if it sort of spikes above 140, which it sort of has done recently. It got to 130, so it sort of drifted back down. So yeah, next one. Okay, this one is the number of the NASDAQ, number of NASDAQ 100, number of stocks trading above the 50-day moving average, and that's at 50. Sorry, it's at 40. And this next one is the number of NASDAQ 100 stocks trading above the 200-day moving average, which is 61. So major wipeout is then when that goes below 15. Obviously, nowhere near that at all. And this one, I wanted to see it sort of go below 20% and back above. So that's kind of still pretty mid-range. Quite often the way down to a 20%, you'll have these little it might go from 80 to 70 to 60 to 50 to 40, then to 50, and then back down again. So it's not usually often you just go a straight line sort of to below 20. So potentially what we're seeing today is a bit of a rally. Then, well, what I'm hoping at least, then we have to have another leak down to get the number of stocks below 20%, and that's when I start getting really quite interested. Okay, Federal Reserve printing, but they've made statements that towards the end of that, they're going to reduce their inflationary program. They now want to get on top of inflation. Put call ratio, that did have a spike, but that's sort of back down to 0.76, which is actually quite low. So yeah, healthy broad-based leadership. Got not really. There's sort of pockets such as semis are still holding up okay. EV, including things like Ford now, would you believe? And sort of some specific stocks under that, but I wouldn't sort of say this is like a healthy broad-based relationship environment. Seasonality is should be pretty good. So if I sort of glue all this together, I'm going to just go straight down here. The conclusion that I've got is I think we're in an amber/red traffic light. I think it's probably more of a, in fact, I'm going to make that red. More of a red phase, which means we're seeing, actually I'll just go back up here. So market in decline. We're seeing capitulation, selling, which we definitely have been seeing a lot of that. But why we still could have some more to go is the number of stocks trading above that 50 days is still sort of fairly high. If we go back up to what the amber is telling us, market breadth deteriorating, yes. Distribution days, yeah, we're seeing like the FANG type stocks. We're seeing divergence. So we're still seeing sort of signs of breakdown underneath the hood, I believe. So that's why I think we're in that sort of amber to red phase, which means to me, still be very cautious, very conservative. We still might have some more downside to come yet, so don't do too much buying, don't do too much selling. It's usually too late to be doing too much selling now. Saying that, they've had the NASDAQ had a sort of good shakeout. I think I mentioned this to previous resistance. So, but equally, most indicators are saying, well, we're not really quite there. You don't have quite that sort of punch in the face, to give us that intermediate low. But I do think it's sort of getting towards the bottom of it. So what I'm going to do now, what I have been doing is just keep sort of working through a list of what I want to buy when we get that signal. So I've got things like so EV makers, so Lucid, XPEV, I've already got options on. Maybe I'll buy more. Ford, Tesla, maybe buy more of that. Some of the FANG stocks actually might be pretty interesting. So Google's just tagged the 200-day moving average. Facebook, maybe buy more of the semis. Then there's some individual ones like Roblox and Trade Desk actually sort of shaping up all right. I might have to buy the stock on those because the options are too expensive. And it's the same with a shipping container business called ZIM, Z-I-M. Volatility is super high, so but the stock, the chart's looking pretty good, so that might be a case of buying the stock. But yeah, I don't plan on doing too much until we'll see, hopefully another sort of push down in the market and sort of give ourselves a setup.